Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your client's money at the same time, it's advantageous to everyone, correct?
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?
Alright, hi guys, welcome again to the channel. Once again, for those of you guys who are new, welcome to the channel where we talk about market profile. It's kind of all we do here. We are like total fanatics about market profile, and I show you how I use it to trade, how you can use it to manage a portfolio, and I teach traders that you don't need to have a ton of money to make money. You also don't have to take large positions, oversized positions, to make money. The name of the game is being able to stay in it until the big moves happen. I show traders how you can use one viewfinder. So here you can say I use a weekly profile, and I can show you how to use one viewfinder to execute within the intraday and manage your positions so that when the markets go incredibly bad or crazy, you are not going to lose a ton of money, and when the markets go incredibly good, you're definitely going to make money. I show you various different tactics that professional portfolio managers use. I show you various different tactics that you can use to manage trades, trade around core positions, and also really develop and hone your skills as a trader. We see a lot of this stuff out there, Lambo traders, people taking 2k, trying to make it into 100k in 30 days. You know, we know that there are prop firm challenges out there that are pushing people beyond the limits of risk, and we understand exactly why all of this is happening. I'm from the institutional space. I used to be a broker, analyst. I'm a trader. I've managed portfolios. I understand, right? I used to be a physical commodity trader, so I get it. I totally get it. I see the allure. Everyone wants to get rich quick. Perfectly fine. However, it's just not realistic. So how do we get out of that mindset? Well, we need to have the tools, we need to have the resources to be able to see another way. Now, we all know that 90% of people are struggling. We know that the markets, the stories that you always seem to see is how much money people are losing. And in my opinion, this is happening because everyone's doing the same thing. So we know what is being done doesn't work, no matter the style, no matter the, however you want to spin it, right? It just doesn't work. You can trade any way you want to trade, it doesn't, we know it doesn't work, right? So we use the profile because we know that 90% of institutions use market profile. It's in all the major institutional platforms, CQG, which the biggest firms in the world use. We know it's in Sierra Charts, we know it's in Window Trader, and we know all the professional traders. I run a podcast. I talk to a lot of traders, like all 7-figure traders, right? And the reality of the situation is very, very simple, right? Most of these guys have been in institutions, and most of these guys have had the experience of market profile, and they are using these platforms, right? There's something for you there. So anyway, guys, I'm not gonna lecture anymore, but it's important to know what we do here. And for those of you who are new, for those of you, of course, who've been with me for some time, then it's just another video where I get to tell you all about my positions, what's gone on in the market, how I've managed it, and I get to flash my P&L on the screen so you can see what I'm doing. Once again, I always say this, trading is about consistency, and consistency comes from having a good strategy and a system to trade the markets overall. So it's not just about the chart in front of you. One of the things I do here is, and I say this to traders all the time, is that I trade options too. So I sell option premium. I mean, I could be buying swinging calls here and there, market open, looking for, gap scanning, everything. I've got all the tools to do it. I've got all the tools to do it. I use interactive brokers. I got TWS. I've got the best tools, right? But it makes sense for me to focus on what works, and I know what works is selling premium. There are going to be outlier days. For example, the S&P's down. I'm short puts, right? But again, I'm short out the money puts. I believe it's my Shopify puts. One of them's in the money, right? I think it's my Shopify puts. Yeah, I think my 60 puts are in the money, right? I'm selling premium on short puts, right? But again, it's not deep in the money, it's just slightly in the money. And I'm hoping that as we get to the end of the week, those premium values are going to start to get knocked back and my position is going to be doing quite good, right? So again, but I do that because there's more guaranteed weekly income that comes with selling premium, right? Especially put options. But again, if you don't know a lot about that, I have a Discord server, and I will put the link in the description, right, where you can check out everything that I do, right? So you can see basically how I like to do things, how I like to manage things. It's all available on my Discord server, completely free, guys. So I push charts up, completely free. Of course, I do run, I do run courses. I've got one-on-one tuition. I help traders get into this business in the way they're supposed to. Again, it's up to everyone, right? You can keep throwing money at the side that looks good. The Lambo traders, there's always going to be someone. Like, I used to be in the brokerage industry. There's always someone you can pay, you can sponsor. I mean, a lot of you guys don't know this, but some brokers make as much as 20 million a month. Picture that, like 20 million a month. And where do you think that comes from? It comes from margin. In fact, as a former broker, I've been out of that side of the game for quite a long time. I still consult with a couple of firms, but I've been out of the game, right? But I can still tell you that even now, it'd probably even be more, but when I was in the business, there were brokers that were making 20 million a month, some of them even more, right? And where do you think this was coming from? The smallest brokers were getting 2 million in deposits on a monthly basis. Those were the smallest. When I left the industry, my first couple of months out, I was on a gagging order. I couldn't say anything. At one point I nearly had a court case for saying something to someone, right? That was a former client of the firm, right? Word gets about, right? So again, it's, there's a lot of NDAs in this business, right? A lot of things you can't say, but obviously now I can say a lot more that I could say. I like to stay relatively anonymous, right? You never know who's watching, right? So the bottom line is that they're brokers who make a lot of money. Like I said, a lot of money. So you can easily go and sponsor someone, right? And say, get all this fancy ad going, get those Lambos out. It's just the reality of today's world, right? So we like to make it real, right? Because we understand guys like you are going to want to do this. People watching this channel, they want something real, right? Some people are considering this for a lifelong pursuit, so you kind of need to know what you're doing. So you need to have a source of guaranteed income that you get from trading, or at least as near to guarantee as possible. There are going to be points where you're going to have to manage risk. Worst case scenario, you should be flat over a given period, right? That's the bottom line. You need to see some investment growth curve, and then of course you want to get into leverage trading, right? So if you're in leverage trading, you need to be able to trade small but trade diversified enough so that you can start to get a bit more outsized returns from leverage trading. But you've got to be very specific about how you do it. All right, enough talking here. Let's talk about the positions. So Aussie dollar, definitely wrong on this one this week. But thankfully I don't have a position on it, right? So I lightened the load a lot earlier on, and I told you guys why I was doing that. If you look at my previous videos, when I did have a position on the Aussie and the Kiwi, I did let everyone know, of course, that I'm going to lighten this load. I'm going to take some money off, because again, at one point my cable position was in profit, so I needed to take some money off. And then obviously now look where we are with the Aussie dollar. I'm pretty sure I'll see the same picture on cable, right? So we're going down on a lot of the currencies versus the dollar, right? So it's a bit of dollar strength here, to be honest. Crude oil was value trade for me. Did talk about this. It was a good ad. I'd already bought into this one from the dip down into value low. So again, we got we got that responsive buying, as we always tend to see. Competitive pricing, single prints, bid stack forming. Consider that support. We traded into it, bought the dip, looked for a value trade, completed. And I'll flash my P&L up on the screen, but also I will flash my first stop out, which is up on the screen there. So had to stop out one of these trades because it was my FTSE position. Had to stop out on it. Again, I always have risk management, but also taking some money off the table with my crude oil ad on the value trade, right? So I traded around a core position with crude oil, right? So again, my portfolio is completely, I'm still up on equity. My balance is completely flat. As you can see, I'm up on balance, but I'm completely flat against the week because I didn't lose any money, right? So you can see that based on the way I manage my portfolio. You can see my P&L, you can see obviously the trades that I've closed out. So it's my first stop, but can you believe it? I've had managing the portfolio 2 weeks, up equity, first stop out, and I'm still in profit. You know, that's how you trade, right? So again, there will be big outsized moves. The market has consolidated across all assets for quite some time, so you don't want to get ahead of yourself trying to like overly swing these and put big position sizes on. You're just going to get killed, right? As you can see, I'm still trading fairly good size across all my assets. However, I'm not getting burned even when the market's a bit crazy. The S&P 500, I'm structurally bullish on this one. I did say there's potential here for a value trade to the downside and trade into the bid stack. I'm looking for a bounce around here. I've added to my S&P 500 position. You can see that from my P&L. I've added to it because again, I'm thinking that if we get a bounce, it's going to be a nice move to the upside. However, I could be wrong. If we cut through the bid stack, we're going to probably trade closer to value low over the next couple of weeks. But again, based on range, which is one of the things that we talk about, is range. So based on range, of course, I think we're really losing steam on the S&P. I think for me, the core support has to be 41110, and we could see a spike up from there. Or if we do trade under, again, we did have this build up here. So if we start to take under these lows from last week, then I would definitely think that we're going to get a much bigger drop on the S&P. We have filled the gap. That's the good news. So I'm not expecting a spike down. I think structurally we're bullish. We just need to be a little bit patient into the US Open. I'm recording this prior to the US Open, so again, this could easily turn around by the time this video is published, which will probably be a lot later on today. So as a consequence, what's playing through here might be a little bit more of a delayed reaction, but I'm definitely structurally bullish. I'm expecting some more upside from the S&P. I think that with the equities and the political narratives, it can be a bit jarring at the moment. All right, so gold was one of the interesting ones. We have a long position still on this, looking for a value trade on this, so pop higher on gold. So still in this one. However, we did trade really close to what would have been our risk benchmarks. But again, nice little bounce up there. And I was saying that yesterday, so if you looked at my previous video from yesterday, you would see that I talked about this, that actually it's just about being patient. We could pop out here. Really traded this in a really efficient value low position. So again, one of the principles as a market profile trader is trade location. You want to be trading from the most advantageous positions. You don't necessarily want to be trading from a position of weakness, right? So again, with the dip we had on gold, I'm structurally bullish on gold short term. So I am looking for those bounces here, and we did have that bid stack from last week. So that had to be the key support level for me. So I was watching that. We also did a value trade going back a couple of weeks. So those, so again, it was looking like this had to be a key support level. It's had a lot of interest. So in my opinion, this doesn't really become a realistic short until we start attacking new value, which is just under 1938. So there's much more incentive to buy this than to go short in the hole. So you don't want to get trapped underneath as a short. Cable, again, huge move to the downside. We're really pushing that range out at the moment against the week. We are Wednesday, and I think we've done a lot of movement. But again, cable, I was bullish on this structurally. We have a gap in value. So again, I'll be looking for that upside to fill that gap. And that's where I want to get involved. It'd be a lot of interesting opportunities for a value trade. So again, cable, I'd say pay attention to this one. It's dipping at the moment. But again, with cable, I'm structurally bullish. So I'd want to see us dip back. I think we've taken out the 4-week low, which is actually quite significant. I think the real volume sits just under the 6-week low. So that's what I want to look at. So I think we should start to find buying here now. So it's looking really positive, I think, coming into the US Open. Dollar yen, structurally, I'm bullish on this one. Always said this, we have a gap in value, so when we turn around, it's going to be massive. I think it's very similar to what we saw in the S&P 500 with the gap we had here. Did mention that in my last video, is that, look, we're probably going to take out the gap, and that means a dip lower. So again, even if we spike low, it was a buy the dip story. So we're seeing exactly the same scenario with dollar yen. huge gap in value. You got to watch out for that one. It will be a nice structural trade when it does start pushing lower. So really interesting here, but structurally I would say we're still bullish dollar yen. I think the yen is pretty weak, and that's the issue for a lot of for this week anyway. Dollar CAD, I was bearish on this one. Again, we've built here, we're still going higher, so it does look like the dollar is strengthening against the Canadian yen. I'm structurally bearish on this one. So again, I don't get the idea of what the play is. So again, this is one of the times where you want to sit it out. We're trading new value, so it does look like we might go up and test that 136 level, which is where I was short my first dollar CAD trade going back about 2 weeks now. And I remember trading this one down, filling the gap in value, covering it as well, and then we ran to the upside, and again I sold it, traded it back down again, covered it, because I just wasn't confident in holding this structurally short, and I just had to play it smart. So I think you guys have already seen me run dollar CAD, so now I'm just going to sit this one out and just see how it plays out. Really, the reaction of 136 will give me the information I need as to whether I want to keep trading this to the downside. Bitcoin, bearish totally. I'm looking for it to hit 125 before I get hit 25k before I get interested. Right, this is my bid stack level. I'm watching this keenly because with Bitcoin you do expect a bit more of a dip. It, in a way, it does suggest a bit more dollar strength, which is not, it doesn't bode like good in the gut, especially if you want to you sell premium. Maybe we start to see bigger dips in the S&P, or we could just see Bitcoin go by itself. We did get some responsive buying here, and that's holding up the market, but the structure at the moment doesn't look good. We bid stacked here, we're breaking that bid stack. It looks like traps longs, right? So we could get a bit of a washout, and that's where you want to start considering positions. So I'm waiting, so I'm a little bit more patient on Bitcoin. I think sterling yen was structurally bullish. We came back down, had a position on this on another portfolio, shut that out, took profits on that one, and then now we're seeing this go back for value. So again, sterling yen is one of those ones where we got a gap in value, very similar to dollar yen, so we could get a big move to the downside. In fact, this looks like a value trade setting up, guys. I'm not going to trade it like that because I'm structurally bullish on sterling yen, but from what you're seeing on my screen, you should be seeing the exact same opportunity, with the exception of the bid stack that might hold you back as support. So it does look like there's a downside dip. So if I get a reaction in sterling yen from the bids, then I would look to position maybe to go back long and break the structure on the upside. Right, we can see that the responsive seller has been taken out. There's not a lot of liquidity left up here, so if we get pushed upwards, we'll have to go a lot higher. So again, I'm really bullish on sterling yen, so I'm trying to see if there's a buy the dip on opportunity from any potential value trade, or even a fill the gap opportunity where you can get long. So again, I try not to go against the structural trend. The Kiwi, again, mad wrong about this one because I was expecting an upside swing, that we have a gap in value here. But sadly, what's transpired is that we are heading a lot lower. So it's a bit on the mad side. We're trading bids here at the moment, so it is what it is. Again, we've overextended. It's a great position to get long in. So I'll be watching this into next week. Any sort of dink ups back above the bid stack, I'll look to get long to trade this to fill the gap, because this is a big gap. There's no way we're carrying this into another week. We've seen this several times. Great opportunity to trade this back north. So the Kiwi's on my radar just because it's really overextended, and right now we are trading into bids, right? So again, pay attention to the Kiwi, guys. So I'm looking at the US Open. I want to see a good return here, but really great opportunity. It might even get added to my portfolio this week, and I'll look to kind of apportion risk and see where we go with this one. Could be a really good opportunity to trade the gap over next week. So again, I want to give it some time, because again, if we close higher, we might get some testing next week, so it'll be a long time just sitting in this. So I'll give it to the US Open. Let's see the kind of reaction we get coming into the Kiwi. But for me, I definitely think at this stage you want to position long. We don't often get weeks where we get such strong outliers, and 90% of the time we will go to fill the gap. So we have had strong weeks, but again, we tend to get a bit more of a return. And if you look at where we're trading, there's not a lot left to go in value. So unlike moves like this, for example, where we had a value trade, and then there was still more downside to do. So even when we got the dink, we could barely fill the gap, and then we're trading back low again. So usually as you're working through value, that's where the critical risk comes. But I think if you're trading these kind of structures, it's a good way to look. So anyway, guys, so that's kind of where I stand at the moment for this week. Hopefully you guys have enjoyed the video. Hit the like button, subscribe button. Yeah, let's support the channel. Let's grow it. You know, it only makes sense to put good stuff out there. There's a lot of stuff we need to counter. A lot of people want to come into this genuinely. But yeah, but once again, thanks for watching.
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April week. What do you think, Valentine?